Welcome to Trading Lounge and the European indices for the 29th of April, and with the DAX on the weekly chart here, this is a pretty sort of hopeful sort of pattern in a way. We've got three waves here, and this five-wave move down through here. So it does make an expanded flat correction. It's pretty, when we called in the lows here for the S&P and the DAX and so on and so on, it was it's been a bit of a trying journey moving up through here and being bullish in all of this when most people thought we would have a rally and continue to the downside. That was obviously the sentiment, but obviously when everybody agrees, you do the opposite. So that's what we did, and this is where we are now. And I think this is kind of becoming interesting. Everybody knows the 50-60% retracement level is important, and it's where it can fail from, and so on and so on, and all that is correct. And the volume that's been moving up in these markets has been minimal, has been lifted up by Treasury and Feds or the European Bank, which also got their meetings tonight and tomorrow, the ECB tomorrow. This move up here, I think it's kind of interesting in a way. I mean, we've got it at the medium level here, which is 11,500, halfway between two major levels here. Just on the daily chart here, one little breakthrough that we've had in this market is that this current top here, if we've called this up here as an A and a B and a C, if that was the case, just being conservative in our move coming up here rather than, being over optimistic and saying we're going to make new highs from these lows here, we just have to take it step by step and stay with the evidence. But one of the pieces here with the evidence is that if we consider this move up here as a three-wave move here, then we've just taken out the top here for this. So what that does is that removes this ABC pattern here, because we've made that new high here. Yes, we could be still part of a corrective pattern here, and we could we could just continue to move up, we could come back here and move up, whatever, we can look at all of that. But the point is, we made that new high, then it makes it invalidates this particular move here. Maybe we could look at this in a different ABC type of pattern, or different type of corrective pattern. B waves here, if that's the case, can get complicated just like a wave 4, not like a wave 2. But anyway, I think that's just a little another little piece of the puzzle that helps us through all of this. So just moving into the 4-hour chart here. So what we can do here is we can remove this ABC here. We'll be able to put it back in some other particular fashion perhaps, and I'll just move these here. I still need a number 2 there, don't I? I don't know where that's gone. Over here, copy that, bring that in here. I'm just going to move these here, just working on the hop. I know I should have all this done, but and I think I'll remove these guys here too, just to clean it up a little bit. I normally just put things over to the side here. We've already got some of those, so I'll just move these across. I'll put the 3 here for the time being, because that's the same count as the S&P 500. And this 1 and 2 here is also the same as the S&P 500 as well. So that's why I've got that. And I could also get 5 waves out of that. I could also get 3 waves out of that. I could also get 5 waves out of that. So I've got up for 1, back for 2, up for 1, back for 2, and then we're going to go along above these highs here, just as a general idea. On the 15-minute chart, we can have a look, because we're actually putting in 3 positions there. The gap over here, we're at the 50% retracement level. The 61.8% is up at the medium level here at 11,000 500. So yeah, couple of things here. Wave 3 is a little bit short, so you know, there's a possibility that we could look at it as a smaller wave 1 and 2 and so on, but I'll just leave it in line with the S&P at the moment. I mean, the DAX can have a different count at different times in different degrees of structure, but most of the time the DAX will lag the S&P 500, and then out of the blue it will catch up, you know, with some, you know, whatever news event or whatever. So yeah, and the other problem with this is that, yeah, wave 3 forward here is rather simple compared to, this is a simple correction as an A and a B and a C here. So this is even simpler here, this little move here. So is it possible to have this as an A, B, C, D, E over here? I don't think so. Not, you know, you can put lines on it to make it look like a triangle as such and have the wave 4 there, but I don't think it is a triangle because of the internal wave structure. But if I have a look at the stock 50, for example, the EU stock 50 here, then this is the pattern here, and it could be counted a bit differently because I've got this up here as wave 1 and then back for wave 2. It hasn't quite taken the low out here, then up for 1 here, but this wave 2 here has taken the low out of here. So I think to myself, well, we could look at this as the A wave here, somehow look at this as the B wave, but it does look like it's in 5 waves. And then this move down here would be the C wave in wave 1 and 2 here, and then 5 waves in the third wave. The fourth wave does spike up, but still, and then wave 5 down here. So we could look at it as an A wave, a B wave, and a C wave here. And if that's the case, then we need to put wave 4 on that low here, which would be this low here. And then we would need to look at this move here. Now we have made a new high here, so technically we could actually put wave 5 here. I mean, it doesn't even need to make a new high, it just needs to have a 5 wave structure. And the situation with that would fit quite well in regards to wave 3 being quite short here, because then wave 5 is even shorter. So then it doesn't make wave 3 look so big. So that's a possibility. I don't think it's a case, but it's something that we, you know, can look at as such. Otherwise, this, coming back to the stock 50 here, just because I've got it here, I can see this move up here as, well, wave 1 and 2 here, then 1 and 2 and 3 and 4 and 5 here for the third wave, fourth wave and fifth wave. That means that that would leave this here as an A wave, B wave and C wave coming back into the 61.8%. Not that it has to come back into the 61.8%. But so we could actually look at this as, well, it hasn't made a new high above here for the stock 50, so we could look at this as wave 1 here and wave 2 here. So in that case, in here, it's possible that we could look at this as wave 1 in here, and then an A and a B and a C for wave 2, and then moving up higher here. Looking at this here, copying this and putting this here, wave 1 and, whoopsie-daisy, wave 2 over here. So that's the possibility. I'm kind of happy with that, in a way. So also too, that, you know, just coming back to this one, what's just a bit cleaner. So this brings it in at the 28.50 here. So I wouldn't turn bearish in these markets unless that 28.50 became the retested resistance. So that would be over here as well. So we could use, if we drill in here a little bit, just go to the hourly chart here. So if we looked at, so I've got this, I've got a few sort of counts here. Oh, this is just another count. But look, if I just copy this here and put wave 4 here for this, then that would leave this as wave 1 up here. I just want to carry this little thing through for a moment. We'll look at all the trades in a moment. So just we just want to find the breakdown level. So that comes in here roughly perfect, 5, second strongest number, perfect. So I would not turn bearish on the DAX unless the 500 here became the retested resistance here. So that's good to know, isn't it? You know, currently counting this scenario to the upside here as wave 1 and 2 here, and then wave 3 here. Well, then wave 4 would pull back to the lower end of group 2, because we're in group 2 now. So we've got from 10,000 to 11,000 here. We've got the minor levels of 1, 2, and 3 that make up group 1, then the midpoint at 5, and then group 2 is, copy that for a second, is put that in there. That should be 720 in there. That will do, that will make group 2. So 65, 72 and 80 here to make up group 2. So hopefully, and wave 4, the 38.2% retracement level from wave 2 low to 3 here, comes in just here. So what we could also say as well, if that 10,650 here holds, then that will be the wave 4. But if that 10,650 becomes the retested resistance, then you know that we will have to may look at this as, copy this as 1 here and 2 over here. That would be our sort of next step. And then if this became the retested resistance here, then we're going to be going, will be pulled, if that becomes the resistance here, then we'll be pulled down to the 10,000. And then we'll need to look at, well, you know, is this, copy this, is this actually wave 5 here? I mean, I'm saying a lot of things here, but this is how my mind works, and I look at everything. Normally, I've got it sort of figured out for you in that regard. So as it stands at the moment, we'll look for this. So we've got trades in here. So these things here, they can all come across here. So basically in here, we're looking at getting a few trades in here. So you may have one in here, and you may have whatever. So if this would be a good time to take a percentage in here for this. I'll leave that up to you, and that means that with these here we want to protect these a little bit. So with a stop we need to bring this over here. So I'll put it here, but the thing here is that, let's just get a little bit more savvy here. This low here to this high here, the 38.2% retracement comes in at 10,656. So the 650 makes a good case for support, and what we would do then, we would only exit these trades if we see this pattern here. So we get that, it's all about the first low below the level, and then it comes back up and retest. So that's where the stop goes there, and 1 point under that. Okay, because that from that point here, that could just push back up from that point, or it could come down from that point. And you could also go short from there as well. So I'll just copy that. I'll put that on that side, and then I'll also copy that, and we'll put that on that side there to go short on that side. So that's the trades, and that's the analysis for that. So we've taken a bit of a wide, you know, walk around the block with all of this. So just checking, it's not really giving me any more information. We'll just see if we hold in group 2 here. We'll have a look at the Footsee now. So this presents a better case here, doesn't it, for the count in line with the S&P 500, because this low here hasn't made a new low here, and I've got my 5 waves here. I've got my 5 waves in here, got my 3 waves here that we're looking to pull back in. We were looking for, just in case, we just wanted to be a little, didn't want to buy on the 61.8%. I wanted to wait until we were working with the 8 here, weren't we? So we were looking to buy, getting positions above support, you know, and support is not just trading up like that and coming back. Support is, you know, it can be it can have its struggle, whichever way it's going to struggle, and then it'll have its first high and come back and sit on it, and then move up, and again, you know. So we've done all the right things at the right time here for this. Do I have it on the 15-minute or tick or anything? Same sort of thing here, really. I'll just look at this 1 and 2 here, 1, 2, 3, 4, 5. So third wave here. So I'll just move these here. Sorry, 1, 2, 3, 4, 5. Have I done that right? I have to have a little check on that. So I think we're okay here for the the fourth wave here as such. I'll just let's just. So from the low here, roughly to there. So we can pull down to the wave 4 of 1 lesser degree. We could pull down to this space here, this top here, and then move up from that point. I reckon that's going to be the case. I can see another case for being more bullish here as well. In this count here, but I always gravitate to the conservative side, so I'm going to leave this 5-wave structure in the middle here, even though there's overlapping wave structures here, as the correct count for the time being. But I can see this being a 3rd wave rather than a 5th wave, and then it won't pull back any further than where it is now. But in terms of stops and things, then we need to allow that price point to play out there. Just do a little bit of housework while I'm in this space. I just want to do that again in here. Just five, 8, 7, 9. So we gravitate to the closest largest number. So we go to the 80 here. So it's the 880. So what we can do is we can move the stop to the 70, because because it's ending in 80. So it'll be 80, which will be subgroup 2. So from 800 to 900, we would have 1, 2, 3, 10, 20, 30, and then 50, the midpoint, and then we'd have group 2, which is 65, 72, and 80. So what we could do is we could move this here, and we could put this, well, I'm thinking of 72. So 72 will drop down to 66. We'll put it as 64, that's fine. That's where we'll put the stop. We'll see how we go with that. We don't want to go down any further, we need to protect what we've got. But even taking a percentage here is good, because the 6,000 here is going to play out as a strong resistance. But I'm thinking we should get there first, and that would be our target area too for that, anywhere above that. All right, I think that's just our 4-hour chart. Yeah, so I mean, if this is correct, we should be going higher than the 6,000. And the other point here too, as I point out in the DAX, we've just tipped this high here as well. So we can also remove this ABC pattern here, and we need to look at it in a more positive light. Alrighty, okay, thanks for tuning in, much appreciated, cheers.